on digital transformation process and what it takes to digitize businesses in order to maximize profitability, through the pandemic. Well, now we know that the pandemic is slightly behind us and masks are slowly becoming a thing of the past. It has for sure left us with one thing: the need for us, especially business people, to reevaluate generally, to reevaluate how we live, how we work, and how we relate with one another. I'm so proud to say that we've kept our promise to have this webinar every month, since January. And now we're halfway through the year already. And today we have something really special planned for you, something that is really a passion of mine, something that I've even built a company around, digital payments. Our topic for today is adopting e-payment to accelerate success in the new normal. E-payment is not the future. It is here today. It is right now. And the sooner more businesses jump in, the bigger the chance for businesses to scale and to compete globally. Just to put it in perspective for everyone, e-payment transaction in Q1 of 2021, this year, rose 82% to 66 trillion naira, compared to 36 trillion naira in the same period just a year ago. You see the significance of the magnitude of the growth from the same period. As you can tell, more people are seeing the value of digital payments, and that's where we are. We're here today to discuss. I urge everyone to please pay close attention as we cover key points that touch on adopting e-payments into your business processes. So I hope you learn a thing or two from our team of panelists. And with this, you have the confidence to make the right business decision that will help you reach your goals in 2021 and beyond. Now, we've made significant effort to put a very rich panel together today, people with a lot of experience in the subject area that we're exploring today. And, I will introduce them very, very quickly, and I'll pass it to them to, talk a little bit more about themselves, the company that they work for, and what we can expect to hear from them today. The first panelist is Timileyin Ogunyemi, who is the head of business and partnership at Kudi. And then we have Gbenga Omolokun, who is the executive director, GRC and technology with VFD Group PLC. And finally, we have Chukwuka Amadife, who is the chief operating officer at Terragon Group. We've selected this elite group of speakers, for you to benefit and tap into their wealth of experience. Panelists, thanks so much for being here, and I'll get to you one after the other for introductions. Ladies and gentlemen, if you are ready, we will get started now. So I'll go around the panelists to get for them to introduce themselves a little bit more, tell us beyond their names what they do, their interest in the digital payment space in Nigeria, and anything else that is relevant, for them to share with us for this on this webinar. I will start with Gbenga.
All right, hi Wale. Hi everyone. Thanks Wale. So my name is Gbenga, and I work with VFD Group, and I oversee technology for VFD Group. I think that's the more relevant aspect to this conversation. So what that essentially means is for our flagship entity, one of our flagship entities, which is VBank, it's a digital bank. So what's relevant to this conversation is, as a bank and as a digital bank, what does the bank do for you, really? It's more about holding your money and enable you spend the money, right? So one of the enablers could be getting you to spend it in ways that yield more interest for you, or enable you buy goods and services. So depending on who you are, whether you're a merchant, you need to collect money, and by regulation in Nigeria, only banks can actually hold money. So I would say digital payments is essentially the core of what it is that we do from a digital banking perspective, right? So we're core participants in that value chain system. So, and this is what I oversee for VFP Group.
Thank you, Benga, for that brief introduction. Next, we'll go to Chukuka for introductions.
Hi, good morning, everybody. My name is Chukuka. You can call me Chuka. I work as the CEO at Charagon Group. Charagon is a technology business which focuses on building technology that helps digital businesses to better and more intelligently reach their consumers. As we know, the financial services sector has been the most disrupted in the Nigerian space, and they essentially form the core of most of the businesses that we support. Today, we have a passion of working with businesses to help them improve their digital customer journey, help them acquire more customers, and essentially help them grow their business value through enabling innovative solutions. Payment companies, as we all know, digital payments are at the core of what fintechs offer, and we continue to support these companies to achieve this. Thank you.
Thank you, Chuka. And then we go to Timileyin.
Yeah. Hello, good morning, everyone. My name is Timileyin Ogemi, and I work at Kudi.com as the business and partnership head of business and partnership and also business operations. Today, Kudi is in the business of making financial services accessible and to all Nigerians, both on banked and banked, basically. And we've been doing this for like the past 4 years, and contributing to the financial inclusion goal of the country.
Thank you so much, Timmy. And for completeness, I introduced myself. My name is Wole. I am the founder and CEO at NetPlus. NetPlus is a company focused on providing digital payment services for businesses. We pride ourselves in innovating around digital payments. So anything that enables a business to be able to receive money or receive payments digitally, that's what we do. We're licensed by the Central Bank of Nigeria to do what we do, and so are many of the companies that the panelists are representing today. So if we can jump right into the conversation, we've divided this conversation into 4 sections, and we're going to be mindful of time. And each section will probably spend about 15 minutes so that we respect everyone's time. The first one is what we call payments 101. Digital payments can be really daunting to many newcomers, especially those who are running micro and small businesses. And so for our discussions today, we want to make it very practical. We want to dummy down things before we go into, the more technical, the more complex things that we would have our panelists break down for us. So that's the first section, and we're going to jump right into it. But we also have other sections. We're going to talk about fintechs. Many of you have been hearing the term fintech for the last year or so. Who are these guys? What do they do? And why should we care about them? We will also talk about banks. There's no talking about fintechs without talking about the roles of banks, or the role that banks play in this space, whether the traditional commercial banks, the microfinance bank, or even the neo banks, or what we call digital bank that Wenga was talking about in his introduction. And then finally, this is another term you've been hearing all year long: cryptocurrency. It's these days you can't talk about digital payments without touching cryptocurrency and blockchain. I want to briefly touch on that. What does that mean for us in Nigeria? A lot of people are following it, but do not really understand some of the concepts around that. So we're going to educate people briefly before we close out today. So if we can jump right into our payment 101 segment. And I'll take this first question around the panelist. We hear terms like, acquirer, issuer, settlement, reconciliation, blockchain, receiving institution, originating institution, processor, switch, agent, merchant, and so on. There's so many times that we throw around as payment professionals. I just want us to pick some of these terms on the call today, on the webinar today, and just explain, what it means, to you and the context of your business, and how we can relate it to the everyday business or business owner who is also trying to adopt digital payment channels. I will start with Timmy. You can pick one or two terms, whatever resonates with you, whatever you work with from some of the terms I mentioned. I'll repeat them again, just for you to make a note. Acquirer, issuer, settlement, reconciliation, blockchain, receiving institution, processors, switch, agent, and merchant. So you can pick anyone, one or two, and just talk to us about what those terms mean to you, and how you're using or you are relating to any of those elements in those.
Yeah, thank you very much. Interestingly, these are terms that you can't do without in digital payment today, right? And in my own space, I would talk about agents and reconciliation, settlements, because the terms are all intertwined, like in terms of how they work together. It's really hard talking about one without having to touch points on the other. So simply, in the market today, agents, mostly called financial agents or agency bankers, these are individuals that are tech savvy and the forefront of financial inclusion. So what they simply do is they probably use a fintech platform to provide financial services to people around them at a commission. So they basically sell financial services. I think that's an easier way to put it. So think of the basic financial services you can do today from cashing. Cashing is also deposits. It's also sending money, right? And then there's cash out, which is withdrawing money into the cash form that you can go and spend anywhere, right? And then bills payments and utility payments. So basically, these guys probably, some of them are mobile, some of them in form of kiosks, right? Have a location mostly in rural areas or in underbanked areas, right? And they are probably using a particular fintech platform with their own POS device that people can approach and decide to do their financial services with them. Most times, what people do with these guys is withdrawals, which is they always have cash at hand with them. And then instead of going to an ATM, or if you can't find an ATM or a bank around, you just approach them and you withdraw. Now, why I'm picking reconciliation as the second thing I'm talking about is because reconciliation is a very, very important part of fintech business. In fact, that is the bedrock of it. Money moves around like swiftly and very fast every time. And the money-making process in fintech is actually on cash flow, right? It's a cash cycle. Basically, your commission joins the cycle and it comes back to you as settlement, right? And then you take your commission off. So most times, as a fintech business, what you're looking out for is your cash position increasing as the flow of cash. So you probably start with 500,000. That 500,000 keeps increasing. And now reconciliation is the process whereby you are able to capture that cash flow very well between cash in and cash out. Cash in and cash out are like two opposite types of transaction. Cash in, money comes, so it's basically a flow between physical cash and e-float. Physical cash is the cash you have at hand. E-float is the cash you have in your wallet or your bank account, right? In this case. So if someone does cashing, which is deposits, what happens is that your e-float position increases and your physical cash position decreases, right? Now your e-float position increases with also your gain, which is like a revenue on it. And if a withdrawal happens, which is a cash out, what happens in that case is that your e-float position reduces, right? And your sorry, in a cash in, sorry, don't let me mistaking this together. In a cash in position, which is a deposit, right? Your e-float, your cash at hand increases, right? And your e-float reduces, right? Because you send money out. Now, in the opposite case, which is the cash out, right? Your cash position, physical cash position reduces and your e-float increases, right? And all this increase and reduction as happens with your commission coming on it, right? And then your revenue is also in this cash flow. So what happens most time is probably you start the business with 1,000, or let's say for in this case 500,000 naira. At the end of the month, ideally your net float position should have increased, both which is the summation of the cash at hand, physical cash, and the cash in your wallet or bank account, e-float, right? And that is how you know that your business is growing. Now, reconciliation is a process where you are able to track this, right? Which is understanding all your cash in transactions, your cash out transactions, your commission, right? And also it involves also because chargebacks happen, right? In this business, and it's one of the ways to easily lose money if you are not if you are not on top of your reconciliation process. So all these things, in a case of chargebacks, it lets you know how much money you have outside, who you have to chase, whether your customer to collect your money back or the bank. So reconciliation is a process, it's an accounting process, but in this case, it's what every agent does. Whether as long as you're in the financial business, you can't escape it, and it's necessary you have a very good knowledge of it, no matter your position, because this is where your money comes from, and this is where you can lose money if you don't take care of it very well. So I think, yeah, that
Yeah, thanks, Timmy. I noticed that you put in like 3 or 4 new terms in explaining the ones that hopefully the our audience were able to follow some of the terms. But you're very right. The example that you gave is a very important one where, and I always tell people about this part of digital payment business. Cash flow doesn't mean revenue. Cash flow doesn't mean that you're making money. You can see that a lot of cash passing through your position on a daily basis, and you might be losing money if you're not paying attention to reconciliation, if you're not paying attention to chargebacks, if you're not paying attention to disputes. You're just like, oh, I'm swimming in money, but no, you're actually losing money. So that's one area that we always want people who are in this business to pay attention to, whether it's the fintech or even the agent themselves, because they have to pay attention to what's coming in and what's going out, and making sure that their position after reconciliation is always positive. Let me go to Chuka, give him the privilege to talk about 1 or 2 terms that we mentioned. And just let me, I see that there are comments coming through. I apologize. If you have any question during the conversation, please feel free to put them in the chat or the Q&A section. We'll pick it up and we'll be able to provide answers as we move along. For example, someone asked if we can put in all the terms so that they can follow it as people or the panelists are talking, which we have done. So if you have other questions, please use that tool or facility and we'll pick those questions up. So let's go to Chuka. Let's hear your take on 1 or 2 terms, and then after that we move to Gbenga as well.
Thanks. So I'll pick the terms that essentially cover the main participants in an e-commerce transaction. So this would be the issuer and the acquirer. So these terms are very often used to make it sound complex, but I'll try my best to make it as simple as possible, right? So the issuer or the acquirer are both financial institutions, more or less. The issuer has a primary role of essentially issuing a payment card to a customer. So if, for instance, you are a customer of VFD and you have a VFD bank card issued by them, VFD is the issuing bank. However, the acquiring bank is the bank that facilitates the payments to the merchant. So what happens effectively is in some rare cases, right, the acquirer and the merchant and the issuer and the acquirer can be the same bank, but in many cases it can be different banks, and that's what makes the transactions, at least at times, very complex. And think about it: when you put your card into a POS machine to try and enable a payment, a digital payment, or when you attempt to make a person-to-person transfer, several transactions, messages, and authentication pass between the issuer bank, the issuer, and the acquirer to essentially authenticate this transaction. So think about it. You need to be able to ascertain that the issuing bank has to check that the customer has value on their card to be able to enable that transaction. So all this happens in 3-4 seconds to facilitate these payments. In some cases, there are more participants. So if it's a person-to-person transfer, it could be the switch. But if it's a digital payment via card, then people like the card processors come in. People like the payment gateway, where you put in the details, come in. So these are different parts of the process.
Yeah, thank you very much, Chuka. The one to throw a bit more complication into what he said is that depending on the payment channel, Chuka used the example of a card. There's a scheme in between the acquirer or the acquiring institution and the financial institution. Think about schemes like, your card scheme, whether you're using a MasterCard or Visa or Verve. Those guys also play a role in transmitting all the communication between the issuing bank and the acquiring bank to make that transaction happen. Hopefully, we've not managed to confuse you a bit more. Let's move to Benga and let's hear his thoughts about some of the terms that we listed.
Okay, thanks, Wale. I think I'll just follow Chuka's line, right, and use a scenario. Perhaps that would also explain, right, a lot of the terms. So, say I go to a store and I want to make a payment. There are many ways I'll make a payment. I could actually do a USSD transfer. I could log into my banking app. I can do a transfer, or I could rip out my card and give them on their POS device, right? So, but I have a store of value somewhere, right? My money is somewhere. So I'm essentially moving money from my own bank account to the bank account of the merchant, right? So the bank institution that facilitates my own money debits from my account is essentially the issuer, because they're the one issuing the payment, right? Then the bank facilitating collections for the merchant is essentially the acquirer, because they're acquiring the payments. Now, in this mix, right, there always has to be a third party in between that can facilitate it. The third party is either the person facilitating the collections via cards, because when you stick your card into that machine, there's a complex, or there are lots of other people involved that allow you check, okay, does Benga have money in his account? Yes, he has money. And then guarantees to the merchants that, yes, Benga has money. This is the money in your account, take it. But the reality is the money doesn't move immediately from my own account to the merchant's account, right? Or to the store owner's account. So the way that money moves is called settlement. And that happens typically the following day, because when I put my card in, like you said earlier, there are schemes involved. It could be MasterCard, it could be Visa, it could be Verve, right? These guys are the ones that have created that structure that allows me, move money with that particular card. So these guys need to carry out reconciliation. They need to check in with the bank. Does Benga have money? Is Benga authorized? Is this Benga's PIN? Is he authorized to actually take money from this account and all of that? So all that process, the reality is it takes a while for it to settle. Now, in other instances, let's say I was actually doing a transfer, that's where a switch comes in because bank A is different from bank B, right? As far as we're concerned in VBank, we're VBank, we don't know what the other banks are doing. But to facilitate movement of money between VBank and another bank, you typically need something called a switch, right? So what a switch will typically do, one arrangement is called like a net settlement because if VBank customers do transactions with customers of other banks, and other banks do transactions with customers of VBank, they'll typically be a net settlement because you can, on one end, maybe we've transferred, 1 naira out, but those other people have also done, 2 naira worth of business to us. So the net settlement, which is the net amount that would move, would be positive 1 naira coming into VBank, right? Then to also touch on processors, when you go online today and you make payments, the processors are the ones that facilitate those card transactions for the most part. So you think of people like Paystack, people like Flutterwave as the guys processing those card transactions. They're the ones facilitating the conversations between the banks, between the merchants, and even to some elements, the card schemes. Merchants are typically the store owners or people that receive payment for goods and services. So in today's day and age, we're seeing an increasing structure where even I as an individual can be a merchant, right? So there are some collection mechanisms that allow me as an individual sort of front as a merchant. So, but I think just to make it very easy, think of a merchant as that store owner or that service provider that needs to receive money um, for goods and services rendered. And I think finally, blockchain. I'm trying to think of the simplest way to explain blockchain, but so think about it this way. Today you bank with V, and theoretically, just you and the bank know about your transactions, right? So if I transfer money to Wale now, um, there's no way Chukuka can validate that I have transferred money to Wale unless Wale and I tell him, right? So if Wale suddenly wakes up and says he has X amount of money, Chuka would literally have to just believe him, right? So theoretically, what blockchain does is it's a public ledger. So if I'm transferring money to Wale, I'm essentially announcing to everybody, CEO, I'm giving Wale this 5 naira, and everybody brings out their pen and paper and says, okay, Benga has less 5 naira and Wale has plus 5 naira. So if Wale suddenly wakes up and says, you know what, I'm transferring 10 naira to Timilane, everybody just looks at Wale and says, no, you don't have 10 naira, it's 5 naira you have. The 5 naira came from Benga to you. So there's nothing else. You can't transfer 10 naira. So that's how blockchain works from a very simplistic perspective.
Yeah, thank you for making an attempt to dummy down blockchain. Good luck with that. So we stay with that theme. I think, Benga, we're going to the next question, which is putting all these terms together, right? How can a small, we want to be practical here. How can a small business start to think about transitioning into leveraging digital payments for their business, right? So we've talked about all these different players that come together for money to essentially move from the person who is paying to the person who is receiving or selling. And the selling party is usually where the small businesses that attend this webinar, that is the composition, that is where they belong, right? So what are the steps that they need to take as a business to be able to transition into that? Imagine a business today that is still predominantly, my customer comes in, they want to buy product of 5,000 naira, they hand me cash and that's it. Or maybe they are even trying now to say to customers that, you know what, you can transfer that 5,000 to me. I have my phone with me and I can easily confirm when I receive that. But beyond that, there are so many other layers of digital payment that businesses can begin to look at, and those channels offer much more, integrated benefits for businesses. Can you quickly take us through what these businesses should look at in terms of thinking about digital payment adoption?
All right, thanks, Molly. So let me start with cash, right? So traditionally, I'd say, as recent as maybe 10 years ago, thereabouts, um, businesses were a bit reluctant to collect card payments, right? So whenever you went to a store, a lot of these businesses would say, you know what, give us cash. We don't want card payments. Now, the problem with cash is that if there's a risk with cash handling, right? So when if a store has, let's say I have a store that sells provisions and small goods, right? If I have an attendant there that's collecting cash, the question then is, how do I trust what this attendant is doing? And without being there myself, I don't have visibility into what it is that they're doing. But even if I was there, the problem then is you give me a tattered 5 naira note. I always have to count it. Where do I store it? There's security related to that. You always have to check. And depending on who my own suppliers are, I then need to carry this cash to the bank, deposit it. So this entire process, there's a huge cost around it, right? So there's a cost in terms of anxiety. There's a lot of time wasted managing cash, right? So enter the POS devices. So today, in the urban areas or in the urban cities, Lagos, Abuja, some state capitals, you very easily find stores now accepting cards at using POS devices. Now, this is, I will call it, step one, because what this allows you to do is, as a business owner, I know that I have instant visibility wherever I am to what the collection structure is at my shop, right? It makes it very easy for at least the more sophisticated customers to come there and say, you know what, here's my card. I want to buy this item and you collect. But increasingly, there are a lot more people. I think, the recent statistics also show that USSD payments, for example, have started to rival mobile bank transfer payments. And I suppose they are projected to also sort of exceed this because a lot of people feel more comfortable making USSD payments, and a lot of people that don't have mobile smartphones are able to use feature phones to carry out USSD payments. So I'll say next step really is being able to, on one end, collect funding online, right? Using some of these online services that allows me to take my store from physical to online and expand it either via Instagram, Facebook, or even setting up my own website. So it expands the reach. So these digital payment collection mechanisms expand the reach of the merchants on one end. And also by accepting USSD payment, it also expands the variety of people that can actually make the payments. And the reverse is now the case, right? So with agency banking and Timi's group and all that, they've now started making because even as a merchant, you don't want to stop cash, right? If somebody walks into my store and says, I don't have a card, I don't have a smartphone, I don't have a feature phone, but this is 100 naira, I want to buy biscuits, would you collect it? Yes, you have to collect it. It doesn't stop you from doing that. But with agency banking and in this whole digital payments ecosystem, we've now flipped that, right? You've now changed, you can now create a new business as a merchant. It's my store. And if I have 5,000 naira worth of cash, I don't want to have to take a cab to the bank to deposit it into my account so that I can make a purchase. I don't want to have to worry, about it every single time that somebody is going to come steal it or whatnot. I could actually turn that into a business with the agency banking structure where I then say, you know what, you can walk in, bring your POS or whatnot, and I give you cash. So I'm now an ATM as well, right? So as a small business, the opportunities with digital payments are quite enormous, right? It increases the reach in terms of where you can take your store or your goods and services to. It increases the scope of how you can collect money. And it also creates a new opportunity for revenues for you, right? So I can flip that cash collection to an income line rather than it being a source of worry and a source of cost. It could also be an income line where people can come, give me cash, and I can give them other services which are digital related, like vending bills, buying airtime, and all that. And I could also give them cash, right? So once you go to the less urban areas across the country, typically the only way you can actually get cash would be from an ATM, walking into a bank branch. But now, more importantly, is via agency banking, because prior to now, the queues in front of the ATMs were enormous. Bank branches always had like a closing time, and also the number of people that went in there was rather large, right? So without agency banking, to be honest, a lot of things will still be frustrating regarding even digital payments at the end of the day.
All right, thank you, Benga. That was really good. So the last question in this segment was really to describe the flow of money in a digital payment process. And I think, Benga, you already addressed that in your last two responses to my question. So we'll move along. Before we go to the next segment, however, I have a question that is saying, the individual is saying, please, under which of the terms would the likes of MasterCard and Visa fall under? Are they just card issuers? So, those guys are actually not the issuers. The banks are the issuers. Those guys are what I described earlier as, playing in the card schemes. So these guys support the banks to issue cards to customers. And then they stay at the back end facilitating the transmission of information that ultimately facilitate payment. So they work with the processors, they work with companies like NetPlus on the acquiring side, they work with the banks, they connect everyone together to facilitate that payment. I can't remember the exact statistics, but the number of transactions that a MasterCard processes in a second, and I think I'll try to find it before the end of the webinar. As a fun fact, is actually mind-blowing. You have to remember that these guys are global. These guys work with almost all the banks around the world, and these guys facilitate payment in almost all the locations. Think about stores, online, ATMs, these guys are there. And that's why they are very, very successful. And that's why they are critical and essential to what we do today. And that's why there's a new movement around blockchain and cryptocurrency that make them a bit less relevant, even though these days they're also finding their way into that scheme. So I hope that was helpful to Chukwuemeka, who asked that question. Let's move along. We're moving to the fintech segment, and I'd like to bring Timmy back into the conversation here. And the first question here is that, and Timmy, I know you work for fintech, so this is quite relevant. So people have been hearing about fintechs for the last few years. You guys are blowing everybody's mind, collecting all the money. Even government agencies are reacting to that and making life a bit difficult when they hear that you work or run a company that is classified as fintechs. So the question is, who are these guys? Who are these fintechs? And why have they become so important? First of all, in the digital payment space, but overall in the Nigerian economy, we cannot but talk about the role fintechs are playing or have been playing in the last 2 years. Timmy.
Yeah, thank you. I'm sure you know that everybody here, we are all in the same category. I'm sure even Mr. Benga would say Big Bank is a fintech too, right?
He likes to say that, you know.
So we are all fintechs. Even the banks are fintechs today. Basically, what I would say about that is it's not far-fetched, right? Fintechs are guys trying to build solutions around financial services, right? And if you look at it, this is something that has not been around for a while. I mean, we have the advent of banks that has been the major financial institutions regulating and taking control of all payment movements in the industry. And the interesting thing is that the need for financial services has grown really big in the past decade, right? We have a lot more people trying to move money, bigger transactions, a lot more transactions are trying to happen, and there's a need for more avenues to actually take this payment, right? And that is what forced the bet of fintechs. And basically, I mean, writing on some of the things Mr. Binga said in the last section, in the fintech industry that we all see, it's two things simply, right? It's either you are trying to accept money, or you are trying to pay money, right? And if you look at it very well, that is where everybody falls into. Is that you're building a solution to help people take payments easily, or you're building a solution to help uh, uh, payout, right? And also, I mean, it's expands also up to the point of you are trying to save your money, you're trying to grow your money, right? You're trying to be sure your money is safe. And all these things are the things that even with the bank's technology today, and it's not like even the banks cannot do some of these things, to be honest. And I think one of the things that the world has forced itself into is the fact that the structure of how the banks are built over time has made it very hard for them to innovate around some things and make uh, these things super available for people, and that's where fintechs come in. So fintechs are coming as actually like riders. They are able to move faster with a smaller structure and innovative technology, basically. So they are majorly like the risk takers, right? And trying to plunge into the market. The market is very fast. In Nigeria, we have like over 200 million people, and the one of the goals that CBN has been trying to push for a while is to get as many people, 80% of this population financially included, right? By this 2020, oh, sorry, 2020 is past, right? But we both know that that thing, that vision was very, was not looking like it was going to come true until fintechs came into and actually went far and wide to get a lot of people into this space. So yeah, basically that's what fintechs do, right? But in the real sense of it, right, they become a major player also, not on their own, right, but also with the support of the banks, right? If you look at it, it's the relationship between fintechs and banks today. It's one of friendship enemy relationships, right? I have to put it that way, because so the banks understand the needs for fintechs. The banks are also trying to, I don't know, choice of word here, fight or collaborate. I mean, sometimes you're not sure which one the bank is trying to do, right, in that space. But basically, I would say the difference between a fintech and a bank would just be basically the structure and the speed to innovate. Everybody's trying to actually like make financial services easily accessible to everybody, right? Accessibility is one of the places where fintechs are playing a major role, and this is one of the reasons why they are very important in the industry. They are the ones that are trying to extend this to the population as fast as possible in a very seamless way. So yeah, that's what I would say.
Thank you, Timmy. I think the what you touched upon in terms of the dynamics between the banks and the fintech is an important one, and we're going to spend some more time talking about that when we get to the bank segment. But to wrap up the fintech segment, we have a couple of questions which I will direct to Chuka. And when fintech, even in the last few years, has become too broad, for us to just describe and pack everybody as fintech. Even within fintech, you have You have pay tech, you have insure tech, you're beginning to have, sub verticals in that space. I want us to talk a little bit about those sub verticals and why SMEs, the businesses that have joined us today, should care about the activities of, companies that are playing in this fintech vertical or sub vertical, as you describe it.
Thanks. So I think to start, I would want to touch on, let's see if I can think about the typical problems that SMEs face, right? And ask ourselves, okay, so how do financial services providers play a role in solving them? So the first problem is obviously financial inclusion. Timilai spoke about how that has continued to be a CBN mandate. How do we have more people in the economy own and operate bank accounts, right? Second option is simplified payments, receiving and enabling payments. It continues to be the lifeblood of any business. You're either paying a supplier, paying your employees, receiving payment from the customer, paying your taxes. So there's always some payments that drives the digital economy or drives any economy. And of course, with COVID, right, there was an increased acceleration towards more businesses becoming more digitized. So today, for the Christians in the house, people tend to attend their church services online. Not to say that church is a business, by the way. And then, of course, even schools, e-commerce, it's becoming essentially changed from the way it was many years ago. Today, I can order I've actually for diesel online, right? That wasn't very common 2 years ago. So based on these problems, right, SMBs now start needing to have solutions, smart solutions that can solve this. And that's where the different verticals that fintechs cover help to address. So the most common, obviously, is payment solutions. So what you would call paytech. So that's where the likes of Paystack, Flutterwave come in, serve as companies that help to essentially bring small businesses online. Now, in the past, this was at a very high cost, but today, any small business with minimal fees will be able to essentially receive payments online. And of course, get charged a transaction fee, which works perfectly well with their own cost of operation. So it just sits in perfectly with their own cost of operations. Then also, there's also the access to credit problem. As you start to do your business, you want to grow, you want to buy more equipment, you want to hire more people, you want to expand to a new location. Many times your current cash flow can't support these needs, and you need the financial service provider to offer you this. We all understand that traditional banks always have a longer bureaucratic process for accessing credits. So that's where fintechs come in through the power of data, through the power of understanding the behavior of the customer. They're able to offer credit at a shorter timeline for these customers. Then, of course, we have the traditional banking services, savings and investments. We have fintechs that offer lifestyle saving products that address different people's needs, targeted savings, investments in various kinds of different financial products. So fintechs simplify this and make it easy for these SMEs to access these products. In some cases, for some banks, you have to be able to transact at a certain level or amount to be able to access some of these products. Fintechs make it simpler, make it more convenient, and make it easier to access. So I would say the three broad verticals that really affect SMBs the most will be the payments vertical, the lending, digital lending, instant lending vertical, and of course the traditional banking vertical. Now there are other developing areas in tech, like Wally mentioned. There's also property tech, right? So these are all developing areas that continue to evolve with time as the market becomes more mature. Thank you.
Thank you, Chuka, for throwing some light and insight into those different verticals and why businesses should care. So we move very quickly to the segment for banks, and I would go to the banker on the panel. Banks are the core of financial services. We know that, and even since we started talking about digital payment today, I've lost count of the number of times we've mentioned banks, because they are also, fortunately, unfortunately, centered to digital payment as well. You mentioned that, banks, you have to warehouse this money. This money is flowing through different pipes, but at the end of the day, it must land somewhere. And that's typically in Nigeria. It's a bank. But the landscape is also changing. There's been, like Timilene said, fintech bank participation, co-opetition sometimes. We don't even know where they are. Today, they are playing partnerships. Tomorrow, they have a competing product, and you're wondering what's really going on. So looking forward, in fact, looking at where we are right now and then projecting forward, what role do you think the traditional, so let's take it in two ways, the traditional commercial banks, what role do you think they are going to be playing in the digital payment ecosystem going forward? And then for the digital banks, is that going to be different, or is it going to be the same thing as the roles that commercial banks are playing today in digital payments? Benga.
All right, thanks, Wale. So let me start with history, right? In the early 90s, we had the new generation banks, right? I don't think anybody calls them that anymore, but there was a time when we were always saying new generation banks versus the old banks. So when the new generation banks came, what they did was they sort of helped reinvent the banking landscape, right? So the old banks did not die, they did not go away. I mean, they basically had to reinvent themselves to compete, right? So to a large extent, I think that's a precursor of what's happening here. And I will categorize things into two. So there are digital banks and there's fintech in general, right? So we need to understand the way banking works in Nigeria. So money in Nigeria and in many countries issued and owned by the country or by the regulator of that country. So in this case, money is issued by the CBN. So CBN knows exactly how much money is out there, right? They know how much money is in physical notes. They know how much money is moved around their digital payments or electronic means at the end of the day. There's skill that cannot be taken away from commercial banks, right? And when we talk about fintechs, to a large extent, we're talking about retail. We're talking about some elements of small businesses, right? But when you start talking about real global corporate scale, you need like firepower. So banks are not going anywhere, right? What fintech has done on one end is perhaps, or what I think it's what this is my personal views in any case. On one end, it'll help banks reinvent themselves the same way the new generation banks did to traditional banking at at the time, in the early 90s up until the 2000s, right? So it will help the traditional banks sort of reinvent and update the way they do things, the way they interact with customers on one end. On the other end, I believe that banks will continue to enable fintechs will never be in doubt. I think a collaborative approach is something that would always happen, right? So you're getting fintechs that are growing larger and larger, but the reality is at the end of the day, they're also going to become banks, right? Either they become similar to a large, commercial bank, or or they remain a technology company that needs to partner with a commercial bank that's plugged in directly to the money pipeline of the country or the ecosystem. So I see what happened earlier as a precursor. Banks would simply evolve the way they interact. They would change the way they work with fintechs. Some of them would simply just, seed a lot of what they do to some fintechs and just be in the bulk space, right? So in the bulk financing, bulk lending, or corporate banking space, and allow a fintech partner carry out a lot of the more digital retail, a lot of the volume-based activities. But ultimately, I think really large fintechs would ultimately become banks the way the new generation banks came and changed things. And fintech would always need to partner, to be honest.
Yeah, thanks, Benga. I have a more radical view of what I think is going to happen.
I don't know. I would like to make a comment when you're done.
Yeah, I have a more radical comment about what I think will become of banking and that space. I think more and more banking will shift to more digital, and the fintechs of today will rise to continue to fill that gap, especially with the wide adoption of digital currencies. I think the need for banks the way they are set up today will gradually diminish. It may not happen very quickly in a country like Nigeria, but globally, I think there's going to be a shift and a wave towards banking digital currencies, and I think that fundamentally will throw a different approach to banking as it is today. So again, that's my own take and prediction on this. But we'll see how that. Timmy, I think you said you wanted to say something as well.
Yeah. So, and this is like for my own personal view and experience of the industry. First of all, the thing is, fintechs are not trying to become banks at starters, right? What happens eventually is the fact that the things you need to innovate fast sometimes becomes very difficult to get until you try to move up the ladder. And the quest for that innovation and trying to achieve all those things, what makes it look like day after day, they're trying to become a bank, but they are basically fundamentally not trying to become a bank. And that's one of the things I think the banks keeps missing, or some banks miss. The bank that will win in the next 5 to 10 years, right? From my own thoughts, is the bank that allows all the fintechs come to it rather than fight them, right? Because see, the mindset of fintech guys, they want to move fast. Some of the APIs, some of the enablements they need. Of course, fintechs are never going to want to hold cash and warehouse cash. It's not what they are built for. It's too stressful, right? They don't want to think about it. I rather just want to build and deploy to consumers, right? Straight away. So now, if banks do what they know how to do best, right, and in turn find a way to create a very, very welcoming and enabling grant, right, for all fintechs, so that everybody can run to you and say, rather than thinking of building this solution, the bank has it, so let me partner with the bank. I know how to sell, right? I know how to move fast. There's no bureaucracy. I know how to build technology around this thing to sell it. So let me just join the bank, right, and do that. So and that's my own opinion. And interestingly, I have an example to back that up. If you look at the Ghana landscape today, right, mobile money seems to be like taking the huge market, right, where MTN and Co. And to be honest, they phased out a lot of banks, right? But there are some banks winning silently because MTN is never holding the cash, right? The bank holding it is the winning bank that domiciles, where MTN domiciles most of their money, right? And I think that is one of the things the bank should think about. And now to finally end it, which is one of the places where I know that the collaboration has been a big or a daunting task for the banks and fintechs over time, is the fact that the appetite for risk differs, right? And it's a question of how do we solve that? And I think these are some of the things that we should be looking at in the industry. and basically finding solutions to solving, and which comes between the bank and the fintechs, right? I think Albert, MD of Access, also mentioned that in one of his recent things. Said, okay, bank fintech collaboration, it's not a problem from his own perspective, right? But the question is, who takes the risk, who bears the risk, right, in all these things? And I think, yeah, that's a very valid question, right? If banks can come to an understanding with fintechs and we can solve the risk problem, my belief is the bank that is going to win. Fintechs, see, they can, right? And they are being pushed to, especially because they want to innovate. Mr. Wale here wants to deploy POS, wants to get transactions, right? He's not necessarily trying to onboard depositors or customers, right? But then he realizes that to do what he has to do, he needs more control. And then realizes that, okay, I don't have this control now. These banks have not been super open. So, okay, let me try and do this myself again. And then keeps trying to maybe now build a wallet, keeps trying to maybe now do something that actually gets these people into it. And I think that's where the core conversation and I also actually use this opportunity to like give kudos to, I think, BFD. I think BFD is one of the banks that, I mean, over time has been open to doing a number of these things in terms of accommodating fintechs. And I think we need that kind of attitude more from the banks, basically, to actually let everybody win in this situation. It shouldn't be a competition, rather it should be a collaboration. Thank you.
Yeah, I was going to go to that, if time permits, for Gbenga to actually describe very quickly a fintech collaboration that they're working on that might interest people. I know that NetPlus is doing some work with them. Maybe that's a good example to share. But before I bring Gbenga, I just wanted Chuka to also chime in on this, which is what we've been talking about. Are fintechs, are they going to replace banks? Is that where you think we're headed? Or just like Benga said, banks are not going anywhere?
So, it's interesting. I kind of agree with Benga on this one. I think what you see is, you see the big traditional banks start to pivot.
You're taking the wrong side. I'm going to mute you after this.
You know why? Because you see them start to pivot, right? You see the bigger banks start to. So I mean, we've seen it happen already. GT Bank has essentially set up a holding structure where they have various other companies within their group that offer fintech, and this is because they've seen that, look, to grow revenues, to continue to retain your existing customer base, delight them, provide them with the right level of services, you have to innovate. You have to change the kind of services you offer. So I see some collaborations. I see potential acquisitions where you see larger banks acquire fintechs, bring them into their group. I see potential mergers as well of smaller banks to also deliver more stronger digital services. And I also see the regulator also playing a very significant role in setting the guidelines that enable this all to work. Yeah.
All right. Thank you. Thank you very much. I'm looking at time, and in the interest of time, I want us to jump to the last segment of our discussion, which is talking about cryptocurrency generally. We had a question from one of our participants asking if blockchain is only for cryptocurrency, which I said no. There are several other applications of blockchain technology. But more generally, let's start by talking about the global buzz, with cryptocurrency in the last month or two. Elon Musk tweeting about particular coin, and it's going up in people trading, and the value going, and again coming to say, oh, we're no longer going to buy it, and then value going down again. People just are paying attention to this, and people are beginning to look at this as a credible investment, maybe even if it's short term, a way for me to invest and sort of increase the value of my assets. To the audience listening today and who has been also thinking, what is this cryptocurrency? Has it come to stay? Is it going to impact us in Nigeria? Benga, to you, I mean, what do you say? How do we explain this concept to everyone in a way that they understand it?
Okay. So cryptocurrency. So I'm sure I'm going to disagree with Wally quite a bit here regarding cryptocurrency and the impact in the banking or worldview perspective, right? Um, so cryptocurrency is essentially, let me call it internet money, right? Or mathematical money, right? So for a lot of them, some people have come together to create a mathematical equation that mimics inflation on some ends, but is also driven by demand and supply. For the more popular one, Bitcoin, for example, it's a deflationary currency, which means rather than it's getting less in value every time, ideally the relative value would always increase over time because the amount of supply in the market is always fixed. So to give you context, I'm sure a lot of people have seen news articles about the Nigerian government printing money, and that also having an impact on what the exchange rates really looks like, right? So what the cryptocurrency guys have done is said, you know what, we need to create a scenario where rather than my money getting of lower value every year, which happens everywhere, even in the US, right? I want the money to increase in value year on year, right? So despite what we've seen with Bitcoin generally, from a net perspective, the value has always actually increased year on year. Um, but speaking more to what, how we should think about cryptocurrencies. For me, I think cryptocurrencies have proved something that there is going to be general acceptance. There's utility. The flaws and the issues are starting to get clearer. And I think the next wave for cryptocurrencies, rather than it being in the open public domain, will be for a lot of governments to start issuing their own cryptocurrencies, right? Because I firmly believe that money is always controlled by the government, because whoever controls the money controls the potential economic prosperity of a particular country, which is something that government and regulators need to have a firm hold on, because that economic prosperity is what helps with taxes, with collections, and that's how governments actually fund or finance infrastructure. So there's a cause and effect, right? So having a structure where the government has no visibility into how these currencies work, especially where terrorist financing or adverse, economic activities could exist, is something that I know for a fact that a lot of governments at some point in time, when they see the impact, would move, right? So up until now, it hasn't really made an impact for most of these countries, especially the countries in the West, right? Because they've also created taxing mechanisms and sort of forced the cryptocurrencies into their banking system. But for the average guy, the reality is some of these cryptocurrencies go beyond money, right? They're actually, think of them as projects. So imagine you went to an e-commerce site and you ordered something, say you ordered a new laptop, and in ordering that new laptop, the e-commerce site is connected to your, let's call it to dumb it down, your bank account, right? It's connected to your bank account. And immediately you buy the laptop, it automatically calls a logistic company to deliver it to you. And until you confirm that you received it from the logistics company, you don't get debited. The e-commerce company doesn't get paid. The logistics company doesn't get paid. So there are cryptocurrency projects that enable these kind of things, right? So there are projects that go beyond just, oh, the value of the coin is X and I buy it and I'm speculating that, a lot of people will buy it and you'll get to this price. There are projects that the basis of the project is this token which is representative of this transaction, has a value. And the more people go to these e-commerce sites and buy, and the transactions happen correctly or unwind correctly, the more this token that's facilitating all of these things grows in value, right? So I think we would see an increased use of those sort of cryptocurrency projects as opposed to cryptocurrencies as a store of value in themselves, right? So that's where I think a lot of things will pivot to down the line.
Yeah, thank you, Gbenga, for sharing that perspective. You said it. I think I come come from a slightly different opinion, where I think that we might be actually moving to using digital currencies going forward. It doesn't have to be Bitcoin. I agree with the fact that the government of different countries will want to be at the center of this and might want to issue their own digital currency for use. Once that starts and there's adoption around it, that might be the de facto going forward. And there are advantages to that. The disintermediation, the fact that there's transparency, putting it on a blockchain network where, essentially people can see the movement of money like you described it at the beginning. But there's this use case that I've heard and I've discussed with players in the space, not just in Nigeria, but globally, thinking about, cryptocurrency for financial inclusion. Looking at using blockchain technology to be able to send money from anywhere in the world and terminate it to the person in the village using crypto and wallet technology, and essentially taking out the need for a commercial bank to be in that transaction, right? And I'll take this to Timmy, because you are playing in that space. The core of your business is about financial inclusion. Have you guys thought about this use case, blockchain, cryptocurrency, to really drive financial inclusion? Because I was talking to a company in the US last year. They are a crypto-based payment company. That's all they do. And they've started thinking about this particular use case and a way for them to get into emerging markets in Africa and play in that space. Do you think that this shift can happen very quickly, or we're still going to be doing our agency banking, cash in, cash out for some time before we start to transition into more sophisticated blockchain platform to achieve the same thing?
Yeah, thank you. First, this is going to be around for a long time. We can go agree to that, and it's not, say, the things that drive this thing is not just one sector. It's a combination of effects from a lot of sectors. Nigeria is still struggling with being the poverty base. I mean, our indexing, all those things, right? And internet penetration, a lot of all these things, right? It's going to catch up, right? I would only say it's not the speed, right? It's the speed is not as fast as we think. We'll get there. The world will get there, right? And the preparation comes. So how do I put this? Interestingly, today, of course, we've talked about so many things, right? We've had a lot of pre-talk, like, or early stage talks with a lot of all these companies, right? It's on the radar, basically, right? It's just a question of you pick your battles per time, right? Today, we'll all agree that we still have a long way to go in terms of financial inclusion, to be honest. The penetration, the market is still so big that there's still work to be done by everyone, right? That's one. And then two also, right? At the end of the day, one of the ways I think this will work is fintechs can use it, cross-border payments. I know that we've been following some of the conversations around Afrimex Bank, right? There's that conversations around Pan-African settlement system and all those things. Now, and even the card schemes are still here, right? They are also printing cards. The banks are still doing a number of those things. We are still importing POSs, and everybody's still. I don't see it totally phased out soon, but I know that the way it works majorly, I think, is that there will be a pioneer, right? We've seen a lot of companies try to jump into things, right? I don't think this race is for the swift, right? I think it's a long-term game of who can stay longer. And if you understand that perspective very well, you know that you pick your battles per time, right? And win each one before you jump to the next one. But yes, it's good to, and which is something we call like future compatibility in the way you build your product, right? Future compatibility of where you think the world is in the next 10, 20 years and seeing yourself in that picture at every point in time. And in the way you build the technology today, you kind of put that in mind. And I think that's the mindset that we have. Yes, the possibilities are there, right? Yeah.
Yeah, thank you. So we'll wrap this up, the crypto section, and indeed our entire conversation by talking about the roles of regulators in not just in crypto and blockchain technology, but generally digital payments in Nigeria. Specifically to crypto, CBN came out a couple of months ago and essentially, uh, you know, ruffled the space, and people were running up and down. And not just that, CBN, NCC, they come up with all those things that essentially disrupt business model. Maybe that's never the intention, but it ends up, disrupting business model, disrupting, businesses and sometimes livelihood. I just want to go around the table, Chukwuka, Gbenga, and Timmy very quickly to get your take about the role of regulators in digital payment, generally, and scorecards to date. Are they doing well? Are they not? Are there frustrations with what they are doing? I have my own frustration. I don't want to talk about it in the public domain so that they don't seize all our licenses. But just generally, what's your scorecard for the regulators in the payment space? Chuka first.
Hi. I would
Hi.
say in the local market here, there's a lot more that the regulators can do in terms of understanding. I know some work has gone into this. They've set up some framework around. But when it comes to Bitcoin, I totally understand their concerns. I mean, cryptocurrency remains very unpredictable. The value changes, and the role of the regulator is really to protect investors and also to safeguard their funds. So what I see is stronger collaboration is needed, more engagement, more stakeholder engagement, and more clarity in where the risks lie. Of course, to protect funds, to prevent potential use of these funds for money laundering, online fraud, and to overall safeguard the entire payment system. So I see it as a developing conversation here in Nigeria.
Yeah, thank you. Gbenga, very quickly, scorecard for regulators in the payment space.
So Wale, I think no matter what the regulators do, there will be some level of criticism, right? So if you look at how Bitcoin or cryptocurrencies were handled, I clearly think it could have been done better because there was quite a lot of data and information that the regulators could have obtained by fiat, right, at that time. But what happened in shutting it down? Yes, their main focus and primary role is to protect investors, protect the general public, which to a large extent they're trying to do. But I think in doing that, there's a bit more engagement that I think needs to happen. I know there's a lot of engagement on various forums, but I think there has to be some broader engagement in terms of the policies they're bringing out, in terms of rather than making things very abrupt, you have to take time, engage, understand, and let people also switch to what makes sense. Because at the end of the day, when there's business growth, when there's business development, the effect is that you get people to pay more taxes, you get people to when prosperity, they get more prosperous. The country itself gets a lot more prosperous as well. So I think with a bit more regulation, with a bit more collaboration between the regulators and the people that they are regulating, it's a lot easier for you to manage that change, right? You help push out the practices and the activities that don't really favor the general populace and government and even the businesses, and try and institute the ones that do so. I think a lot has been done with the regulatory sandboxes, but a lot more, to be honest, still needs to be done.
All right, thank you. And very, very quickly, we're running out of time.
So I think it's an understanding gap, basically, right, that needs to be fixed. The regulator in quotes are trying to help everybody, right? I mean, according to their mandate. And I just think they need to understand us more. And also, I think the fintechs and the banks and everybody also need to reach out and try to present themselves in a way that CBN will know that, okay, yeah, let's come together. That's the only way to solve it, right? And yeah, I think just like Mr. Agbenga said, I think he has more insight into that, and he probably sees a lot of things we are not seeing. So if he says that work is going on, we'll do that.
Yeah, I mean, my last comment on that is that it just appears in the public domain that sometimes the regulators are trying to catch up. And instead of taking the time to really, sift through the data, understand what's going on before applying policies, it does seem sometimes like they apply the policy first to put a break, and then they go back to catch up and then come back to refine that policy. And in that period, a lot of businesses and business models are impacted. That's just my take, the way I see it. Before we round up, I know that the sponsors, both Business Day and NetPlus, have messages for us. The moderators, do we have the videos? Linda, do you have quick comments from Business Day before we start to round up the webinar?
Yeah, hi. Good morning, everyone. Thank you so much to the speakers. Thank you, Mr. Wale, for making this come true. I'm really grateful. We don't have a video, so I'll just quickly talk about some of the things that we're doing. At Business Day, we're trying to see how we can support businesses to make sure that they grow and that they do well. We've also come up with some discounted SME subscription that they can take advantage of, also with adverts, just so that it's not too much for them. So they can always send an email to linda@businessday.ng or give us a call or send us a message online, and we'll be able to respond to them. We're also working on a new TV show called Business Day Future Series. So for businesses that also want to take part in the TV show for this year, we're working on season 2 and season 3. They can also contact us to be part of the project. Once again, we want to say thank you to the speakers, the people attending. We really appreciate you taking our time every month to be with us. We hope this will be bigger every month and be better at the end of the year when we have a bigger event. We look forward to seeing you again next month. Thank you.
All right. I hear there's a video. Please go ahead with that, and then we can wrap things up.
Hi there. You may have heard of the NetPlus mini device. Well, this is not that. This is the NetPlus Pro, and you're watching the unboxing video. Sit back and relax.
The NetPlus Pro is finally here, and it means business. It comes with a quad-core Cortex processor, a 5-inch display, and a 1-80x720 pixel resolution. Battery power to last the whole day on a single charge. The physical on and off key and the volume control are on the left side, right here. You see, the NetPOS Pro is one of a very limited number of Android POS devices in the world with a 2-inch thermal printer. So, you can print out physical receipt for your customers. We know how important it is for many of us to have a paper receipt. Now, onto the card reader that allows for magnetic, smart and contactless cards. You can now accept many kinds of payment with this, making transactions as seamless as possible. Other features you should know is Bluetooth and Wi-Fi enabled. It has a speaker, a microphone and a headphone. It also allows for 4G coverage, and this may be the coolest feature yet, but it's got GPS too. That's it for now, but if you want to know more, then visit netpos.com.ng. You can place your order directly and get a device delivered in 24 hours.
With a growing population, the federal government set aside $25 billion
The fishing community of Makoko has been in the heart of Lagos for 2 centuries, but it's now under threat. Some parts have already been demolished.
All right. Thanks so much for the sponsors. We've been talking about payment and payment channels and all that. We saw that NetPOS video. For those of you who have need for payment terminals, we can reach out to the NetPlus team, and we'll make one available to you with all the applications that you need. This is where I want to thank again the panelists for joining. Thank you, Benga, Timi, and Chuka for creating time to be part of this. I enjoyed the conversation and the interaction today. I value the difference of opinions, and I'm sure that the listeners and the audience, find it engaging as well. I want to thank everyone who has taken time to also join the webinar today. We thank you, and we hope that this was as informative and as productive as you wanted it to be. We do this every last Thursday of every month. So we're looking forward to the next one in July and throughout the rest of the year. Now that you've joined one, please always mark your calendar to join us. And the panelists, I'm sure, will have an opportunity to bring you back again. To the organizers, to everyone that has spent time and energy and resources planning this, I want to say thank you to everyone. Until next time, I want to wish everyone a good rest of the day and rest of the week as well.